Okay. So guys, welcome back to our TradFi and Bitcoin Club. Today we will be discussing about STRE. In the last session, we discussed the B minus rating of strategy as a issuer. Now today we are discussing about STRE, the first perpetual preferred stock launched by strategy in its first global offering. So they are going global to raise money and buy Bitcoin. If you can see my screen, this is the slide from their Q3 earnings call, wherein they talked about they are looking to expand their geographic access to Bitcoin-backed credit. So here they have launched their first perpetual preferred stock, STRE, which is Stream, and they are targeting around Euro $4.1 trillion market, which will it's one of the target markets for STRE. I know there will be some conditions for European investors as well, because strategy is listed in the US. They might not be able to invest in STRE as well. So, because as you can see here, they are only able to access 4.1 trillion fixed income market. I am damn sure that their fixed income market is way bigger. It's around 15-16 trillion. So yeah, that was about STRE, which they gave a hint in Q3 call, and few days after, like 10-15 days after the Q3 call, they are here with the STRE. So as we all know about perpetual preferred stock, STRE is also a perpetual preferred stock. It's more similar to STRF. For the sake of the people who don't understand what is perpetual preferred and all, let me just go to the screen. So there are ways through which company can raise money. So here is debt and here is equity. So in between, there are various kinds of instruments where CBs come, preferreds come.
Sorry to interrupt, but I'm able to
Yeah.
see your deck.
Yeah. So CBs are like convertible bonds. Convertible bonds mean like, for example, the bond has a strike price. Like, for example, a bond is issued at maybe 200, and the strike price, it would be hard for Chetan to grasp all of the concepts in a single in a single session. But we have our sessions recorded, so whenever you get time, you can see the recordings in the YouTube as well. But yeah, just to give you an overview, what are convertible bonds? So convertible bond have a strike price. Let's say, for example, convertible bond has a strike price of 400. So what this 400 means, MSTR is a ticker for MicroStrategy. So if MicroStrategy's share goes above 400, for example, MicroStrategy's market price is 500, which is not, this is hypothetical example, then these convertible bond holders have right to convert into MSTR. So this is like, there is a ratio, predetermined ratio, wherein sometimes it's 1:1 or 1:2. So these ratios depends. But when this thing happens, what convertible bondholders can do, this is simple arbitrage. Like, they can convert into MSTR common, and where the current value of their bond was 400, but because MSTR is trading at 500, they are like $100 arbitrage kind of profit. So this is how convertible bonds gets converted into equity. Preferreds are more like equity like. So what Michael Saylor, in preferreds also we have many types, like one is perpetual, other is non-perpetual. What is perpetual? Perpetual is like till the company is uh, like alive and don't go bankrupt. Non-perpetual is like it has specific maybe 5 year or 10 year. And then comes cumulative, and the last one is non-cumulative. So cumulative is like preferreds have these dividends which needs to be paid before anything goes to common share. So MSTR is the common share, and preferreds receive dividends before common equity. So it's like kind of compulsory, but it can be paused as well. So cumulative means, let's say for example, so for some time dividends are paused for a quarter, and then next time when you pay dividend, then you have to pay last quarter dividend as well as this quarter's dividend. In case of non-cumulative, if a dividend is skipped, then it is skipped and you don't get any dividend. Now coming back to perpetual preferred, like stream. Yeah, I hope my screen is visible. It's visible. So what is stream? Stream is again it is 100 euro notional value. It's euro denominated. So it is targeting European market. It's more like STRF because it has 10% 10% dividend rate. Like from on $100, you will be getting $10 of dividend per year. So yeah, and coming to one of the interesting slides here. Before going to that, let me just share other screen. Okay, so for some reason other screen is not visible. Just a minute. Okay, my other screen is not visible. I don't know what's happening. It should be.
Digant, you can maybe share your complete desktop. That way
Yeah.
it might get visible.
Were you able to see this which I did, or my the strategy
STRE was
Okay.
visible. Yeah.
So I did this scribbling, but I don't know. Now you are able to see this white screen, right?
Nope.
No,
No.
you are still seeing the STRE.
No, I'm seeing Discord.
You have to unshare and share like whole screen, like whole, and we'll be able to see.
Now, what you can see
Yes,
now?
we can see. Yes, we can see.
Oh, so very sorry. I was doing this for explaining like how things work when companies raise capital. So now you can see like debt, equity, convertible bonds, preferreds. This here I gave example about like what is convertible bond and how it converts into equity, and these are types of perpetual like preferred stocks, not perpetual. So thing about STRE, where does STRE sit in capital stack? So first comes convertible bonds. So in the case of bankruptcy, first in line will be convertible bonds, then comes STRF, then comes STRC, then comes STRE, STRK, and last is STRD. So STRE lies here, below STRC and above STRK. So this is how strategy like STRE sits in the event of bankruptcy. So first in line will be convertible bonds, then STRF, STRE, STRC, and STRE. Now the slides are visible, right?
Yes.
Yeah.
Yeah. So in STRE, there is comparison with STRF. Just a minute. I am also going to explain tax equivalent yield today. So what is tax equivalent to the people who are not aware? So this is how, like in general sense, how STRE is. So it's similar to STRF. The dividends are paid quarterly, dividends are fixed, so it is not variable like STRC. Then dividends are cumulative in nature. So for example, if a dividend is missed in particular quarter, then whenever they resume dividend, they have to pay back the earlier quarter as well. Then it has escalating dividend protection. What does this mean is like, let's say if dividend is skipped, then for that skipped dividend, you will get some extra dividend, extra yield. For example, if you are getting $10, but if some like they pause for some time, then 0.25 basis points, 50 basis points, you will start getting accrued as a dividend, and when they pay, they will have to pay extra amount. So it sits here at 10% effective yield per annum. It is also perpetual in nature, and this thing I explained to you, the ranking where it sits, STRE. Now, Europe is much more yield starved as compared to our like the US. So as you can see here, this pricing framework which they have discussed here about STRE, if you can see these numbers are based on as of 31st October 2025. So if you go today, the numbers will be like on that day STRF was yielding 9.2%, but today it might yield some more because of the drawdown, recent drawdown, maybe 10, maybe 9.5 or 9.8. So, but yeah, for our calculation purpose for today, we will consider this. So this is how Saylor has targeted STRF. So as we all know, the duration for STRF is 10 year. What is duration is basically because the dividend is 10%, on $100. So 10, 10, 10, 10. On 10th year, your whole capital will be like you will get your $100 back. So that is, in simple terms, that is duration. So here, how Saylor has like targeted this 10% yield, he has given the calculation of this. So in the US, 3.7% is 10-year US swap rate, or maybe you can consider the 10-year bond is trading at 3.7% yield. And on top of that, US corporate high yield spread. So this is high yield means junk bond kind of a thing. In our last discussion about B minus negative rating, Fineng also said that B minus is generally junk or maybe just above it, and B minus rating is like this company may be going bankrupt in 4 to 5 years. So this is what B minus implies. So in the US, high yield spread, like corporate high yield spread above this. What is spread? Spread is basically what extra you have to pay to attract investors. So 3.7% plus 3% is what other US corporations raise. This is basically 6.7%. And on top of that, because this Bitcoin backed product and its new product in Wall Street is giving 2.5% incremental on top of that. So in case of Europe, as you can see here, the Europe's 10-year yield is much lesser as compared to the US. It's 2.6. Also, the high yield spread sits at 2.8. And if we give again the same 2.5% incremental spread, then it comes around 7.9%. But on top of that, since it's a first initial offering, he is again giving 2.1% extra on this 7.9%. So essentially, you are getting 10% yield on STRE, and this is how he is trying to make it look attractive. This is some comparison of how like 10-year US swap rate looks, yeah, and how Europe and how in Europe looks. So this is general credit spread 279 basis points. This means like 2.79%. It's much lesser in EU as compared to the US, and this is what plus like 530 basis points, which he is giving extra in STRE. So this is what this is how the like pricing framework is working for STRE. Yeah. So now this is some market comparison which he is doing, but one thing which I will like to add on is like preferred stock is preferred stock. It's not a bond. So I am not getting this point, or I get this point from strategy's perspective, but I am not getting this point from a investor perspective who is looking to invest in fixed income securities. So let's say, for example, I am a bond investor. Bonds interest is liable to pay. Like if company doesn't pay, then most probably you are considered as bankrupt. There are cases where some restructuring and all happen, but yeah, most probably you are considered that this company is not doing good and you are bankrupt. But when we are comparing this with bonds, this preferred stocks, I don't know how this product will evolve, but as an investor, uh, how how do I see this product? Maybe it would be a good comparison with comparing it with preferred stocks, but as we all know, preferred stocks trade very thinly as compared to strategies preferred. Strategies preferred are outliers. Like the trading volumes which strategies preferred have is 5 times, 6 times higher than all other preferreds out in the market. So yeah, but still, since we have this slide, we can go through this. So what do these European investors do is like they invest in these kinds of ETFs like iShares. This might be a BlackRock high yield corporate bond index. Then this S&P Euro dividend aristocrats, iShares Euro dividend ETF. So these two might be comparable to this STRE product because this is dividend, not coupon. So these two might be can be compared with STRE, but yeah. And then comes iShares Euro dividend ETF, Invesco Euro corporate hybrid bond. So total assets, as you can see, 8 billion, 1.3 billion, all numbers are in euros since we are looking in EU. 1.1 billion, and the last Invesco Euro corporate hybrid bond is around 300 billion. So effective yield, as you can see here, is 5.5, 6.6, 4.7 and 3.3, and STRE sits at 10%. one more thing which you have to pay when you invest in a ETF or or a mutual fund, you have to pay this expense ratio, where in case of STRE this is like not applicable. Now, Michael Saylor is marketing this product as highly tax efficient because of ROC. I will come to ROC. Yeah, maybe I should come to ROC right now. If he has, yeah, here. So what is ROC? I have discussed ROC in the last session as well. So ROC is like return of capital. So how Saylor is reporting this dividends. So he is saying that the dividends which I am paying is from your own capital. This is termed as return of capital. So this is valid. Like this is being done by many companies around the world. So for example, you buy STRE and you give $100 to a strategy. Now, what they are claiming, like they are paying $10 every year from that $100 only. So this is not literally true, but to show in like to report in tax, like whatever the reporting which they have to do with SEC and all, gap reportings and all, they have got an approval for ROC, like return of capital type dividend. So because it's return of capital, the dividend tax rate which you get is 0%. And this is also because strategy's earnings and profits are negative right now. So all the Bitcoin gain and all Bitcoin dollar gain which we see, this is mark to market, and this is not considered in as a real net income. So this I have also talked about in our previous sessions, uh, wherein some people or wherein people around X talk about these treasuries should trade at a PE multiple, but this doesn't make sense because it's more like a bank and should trade at a PB multiple. So these this is other OCI. These are the earnings from Bitcoin gains go into OCI, the other comprehensive income, which fluctuates on Bitcoin's price. So, for example, now in this December quarter, if Bitcoin's price remains at $91,000, then strategy will report a loss. So this is why OCI is not calculated in what do we say, net income, or even if it is calculated, analysts remove that part. So this is what I have been taught in my curriculum. Like I don't calculate P/E ratio and all kinds of thing if there is OCI, like other comprehensive income part. I just remove the OCI part and then give earnings multiple to that particular company. So because earnings and profits are negative, these dividends are tax free. So because of this, the 10% dividend climbs to 15.9%. So this is calculated based on the this US tax equivalent yield, but I'm not sure about what are the tax brackets in the EU. But for the sake of understanding, what I have done is like I have done something for like did some scribble for you guys. I hope my white screen is visible now.
Yes.
Yeah. So to calculate what is tax equivalent yield exactly. So tax equivalent yield is like R is here basically yield, and upon 1 minus T. What is T? T is tax rate. So when Saylor is calculating 15.9% as a tax equivalent yield, but the real yield is 10% to STRE. But what is the exact here I have calculated what is the tax rate of individuals. So it depends on what income you in what bracket you fall into. So it depends on your tax bracket. But when they are showing, they most probably show the highest tax bracket because the number shows like number gets inflated when T is higher. You can see in the formula as well. So here I have just calculated what is the exact tax rate for 15.9% of tax equivalent yield, and the tax rate comes to 37%. So for the investors who fall into 37% tax bracket, for them the yield sits at 15.9%, and this is why return of capital seems very attractive to high income investors. So this was about tax equivalent yield. Before going ahead, till now, if you have any questions, please feel free to ask. Okay, so I see no questions. Great. So going ahead here, there are some more comparisons out here about Euro index market comparison. Now,
And Burgess has one question. Where does he generate the yield from?
so yield is coming from the MSTR common share. So he is generating yield from selling MSTR. I mean, the question is like, where is dividend? If I'm getting your question right, how is he going to pay dividends? He's going to pay dividends by selling his common stock. And where is the yield coming from? The yield, if in case of yield, it's like a strategy is now working like a bank. So he is dependent on his, for example, if I can scribble here, if BTC's CAGR is 30%, this is what he assumes in most of his calculations, and the yield which is he giving to a preferred prefs is maybe 12% on an average. So 30 minus 12, this is what his margin to strategies company. So this is like a banking business for when you are doing an FD, you get 6% and bank lends it at 12%, and whatever the difference is, that is the net interest margin of a bank. So similar kind of thing is happening with strategy as well. So the yield, basically Sailor is I can show here as well. Yeah, Sailor is trying to chop off volatility by issuing these kinds of preferred products: STRK, STRD, STRF, and STRC, and now, as we know, STRE. So what he is doing, because he is doing giving dividends, the volatility of these products tend to be much lesser. So if you can see, in case of STRC, the historical 30 days volatility is 13%. And if you consider volatility of MSTR is 83%, volatility of BTC is 55%, what volatility of STRK is 28%. So what he is doing, he is trying to decrease volatility, and this is like energy conservation. So if he is decreasing volatility, the people will get lesser returns, and the excess return and excess volatility is transferred from these preferreds and debt-like products to MSTR. So the people who want to take leverage, they are buying MSTR, and the people who want to be some like they want to invest in less volatile products, they are free to invest in these kinds of products. So Sailor says is like this. Um, these products are for the people who are at the age of 60 and who don't like volatility of 60. So yeah, this is how he says. And this game is can only be played if BTC CAGR remains higher than its cost of capital to raise. So unless and until BTC CAGR is higher than 12-15%, this game can be played. And if CAGR comes down, then he has to think something different. But yeah, where is yield coming from? Yield is coming from Bitcoin, but where are like how is he going to pay dividends? He is going to issue MSTR ATM above 1 times MNAV, and if it's below 1 times MNAV, then the worst case scenario which he talked about is selling Bitcoins to pay dividends. He's basically doing a legal Ponzi scheme where new investors provide yield for old investors, but the legal part is here is he's buying an underlying asset that goes up in value related to his debt. Yeah, many people are calling it as a Ponzi, but I think the Ponzi involved here is like the dollar. Basically, the game is short dollar and long Bitcoin. This is similar to what happens in real estate as well. So in real estate also, people take loans, long-term loans, and buy real estate. So yeah, Burjis, to your question, uh, oh, this question is from Apaluk. Apollo, to answer your question, so unless and until ATM, MSTR ATM is available to him above 1 times MNAV, and people are giving him a premium, he will obviously do MSTR ATM. And below 1 times MNAV, if he sells Bitcoin, then this does not qualify for a Ponzi. And one more thing which I would like to tell here, because of this, because of this ROC, he is doing it beautifully. Like because of this term ROC, he in case of reporting as well, he is saying that I am not giving dividends from new people to the older people, but I am returning your own capital. And this is how he is tackling the Ponzi allegation or maybe if sometime in the future, if he has to, if someone does some legal thing with on the company, then he can just say like I am just returning capital back to the investors. I am not paying older investors by raising money from newer investors. So this is what he has done with ROC. Yeah. So is there any
So
more
I just
question?
got my mic rights. Just one question. When
Yeah.
you say return on capital, right? And if it
Return
is
of capital.
10% dividend payout, which
Yeah.
means that effectively in 10 years' time,
Yeah.
that stock is no longer a perpetual stock, correct? Or does it still remain a perpetual stock?
It will still remain a perpetual stock because the stock is perpetual. It's just that duration, like the money which you invested, $100 which you invested, you will get back in 10 years. This is how duration is calculated.
Okay.
The stock will keep giving dividends like
Perpetually
after
till
10
the
years.
time you hold it, right?
What?
I'm saying the stock will yield dividend to the extent of 10% till perpetuity,
Yeah, till
irrespective of
yeah,
irrespective of the 10 years has elapsed or not.
yeah.
Okay.
But I think there is. Can you hear me?
Pinang, we can hear, but voice is low.
Yeah, no, but I think there might be a return of principal involved there. Might be worth checking. That might be.
Return of principal. So $100 which he raised. I mean, what do you want to say
Yeah,
exactly?
I'm just wondering if the principal will stay 100 till the
Hmm.
end of, for perpetuity, or is there a chance uh, it deviates from it keeps reducing over time?
Basically, the preference value which you are talking about.
Yeah, the notional of the bond.
Yeah, notional value. Yeah, I will check and maybe we can come back to this in the next session. I am also not aware. Yeah, coming back to our on Burjis, one more on your question as well. This is how he talks about where is the yield and how is he going to pay dividends. So interest and dividends as a percentage of capital raised, equity raised, operating income, and daily traded volume. So as we all know, Sailor is just uh, like they have raised 39 billion, and the current dividend liability, interest and dividend liability which they have is like $731 million per year, and that this is just 1.9% which he has raised, and 2.8% of equity which he has raised, and 6.5% of operating income. I don't see this number very reliable, because operating income will change according to the Bitcoin's price. But considering the fact of the company to raise the power of company to raise capital is very high. So yeah, I would also
Which I
like to,
understand, and I feel that this graph is slightly misleading
yeah,
simply because the amount of capital which he's raising, he is effectively using that capital to purchase Bitcoin, right? And once that amount of capital is already blocked in an asset, there is no capital left with him to pay out the dividend.
so basically he has been paying dividends to these STRC, and I think one quarterly dividend also has been made on the preferred products via raising, via issuing
MSTR.
MSTR ATM. Yeah,
Basically, what he's doing, he's funding these dividends through MSTR and nothing else. And
yeah,
MSTR is where the volatility lies, which is the volatility is because of the price fluctuation, and therefore people who are averse or not averse to high risk would
yeah.
want to get into an MSTR investment rather than these uh, preferred stocks, right?
So
That is
basically,
where the money is coming from. Because if you see his main line of business, which is software products and the peripherals, the income is roughly around 475 million dollars annually.
no, it's much lesser. It's 50 million.
It's gone down further.
No, profit
Yeah,
is 50 million. The revenue is around, correct,
revenue is
400 to
around
450.
500. Yeah.
Yeah, right.
So yeah, basically the game is this: like the person who want a leverage position on Bitcoin, they are taking positions in MSTR, and the people who want lesser volatility, they are buying these preferred types or convertible bond types of products which strategy is issuing.
I mean, put it a little more clearly, or easy to understand. The MSTR is pure equity. This is more of a bond where you're getting an assured return of 10% or whatever the coupon rate is.
Yeah. The preferred equity you are talking about, right?
Preferred equity. That's right.
Yeah. And
That makes
also,
sense.
thing which I would like to tell. So if dividends are paused and seller has issued MSTR ATM and he wants to buy Bitcoin, this is prohibited. So if in case MSTR is at maybe trading at a good MNAV and he wants to issue ATM and buy Bitcoin on MSTR, he can't do that before giving dividends to these preferred holders. So whenever he is going to issue MSTR to buy Bitcoin, first thing he has to do is like he has to pay dividends to these preferred holders and then he is open to buying Bitcoin. But
It
what
makes
I
sense, but if you see the percentage of dividend payouts, it's negligible, and I don't see a challenge for him to do that.
Yeah. So in the last in the last session where we discussed about B minus rating, S&P S&P wrote this very beautifully. Like the dividend paying capacity is dependent on the company's capital raising capacity and also Bitcoin sentiment. So if Bitcoin sentiment is going down, then capital raising capacity also goes down. So everything is dependent on Bitcoin in case of MSTR. But yeah, this is what this is how it looks. Operating income part doesn't make sense for me, but the capital raise and the capital raising which they have done in the past is brings some trust to the preferred equity holders that company could raise more capital. Now, before going to next discussions, I would like to, if I am able to play a video of Lynn Alden here. So, if you guys know, Coca-Cola has raised uh, 40-year bond. So Lynn explains it pretty beautifully. I will just stop sharing my screen, and till then, if you guys have any question, please feel free to ask. I have the link here. Just a minute. Yeah, here it is.
So we have impacts to citizens and individuals as well as countries, but the US also has their monetary policy has impacts on, and fiscal policy has impacts on corporations as well, right? So why are corporations now buying Bitcoin? So
I hope you can see the YouTube video and
No, we cannot see. We can only see your screen.
okay, just tell me now. Now is the YouTube screen visible?
No. You have to share your whole screen.
Now, I think now it should work.
Yes.
Yeah. So I'm playing this video. This is around maybe some couple of minutes.
A couple reasons. One is I mentioned before that in this era, one of the ways to get rich is to short currency and buy assets. And corporations have been one of the best at doing that. Some of the examples I point out, like so Coca-Cola has been like profitable like longer than we've been alive. Why do they have like 40 billion in debt?
Yeah.
Right? And it's because they choose to, because it's kind of their version of doing a speculative attack on the dollar, ironically. They would never phrase like that. But they would say, hey, if we can issue bonds for 20 years at 2%, why would we not do that? We could buy almost anything else with that money, and it'd be better than just, not doing that. Most individuals can't do that, but these large companies can. And so one of the best products Procter & Gamble ever sold for itself was its bonds. It's, if hedges are going to sit there and hold 3% Procter & Gamble bonds for 30 years, they're like, okay, great, good job, guys. And then they go and they buy their own stock with it, which is higher returning than 3%. And so basically corporations have been doing this kind of purposeful financial arbitrage for a long time, where they decapitalize themselves and they pay out dividends, they buy back their own shares, they make acquisitions, using their shares as a currency, and basically shorting fiat currency along the way. And yeah, one of the more recent ones, I mean, obviously pioneered by strategy, is to do with Bitcoin. To say, well, instead of using that money for dividends and share repurchases or acquisitions, we will stash it in Bitcoin, which has a hard cap supply and is being adopted as global portable capital and money. And has a high appreciation rate historically, and by all analysis is likely to continue, at least according to those who run these companies and invest in these companies. They're bullish on the asset. And so wherever they can, they also issue various types of dollar liabilities, or in some cases other currency liabilities, and are long Bitcoin. And it's basically it's a financial arbitrage to say, if you're going to keep debasing your currency, then we're going to basically short it, and we're going to buy scarcer assets with it. And individuals have historically been able to do that to some extent with, say, like anyone who has a mortgage and also has financial assets is basically choosing to be levered. Like you could, sell your assets and pay off your mortgage, but you're choosing not to, because if you locked in a mortgage some years ago and you're paying a 3% mortgage, and especially in America where it's like these long fixed rate mortgages, and people can hold stocks, they can hold gold, they can hold Bitcoin, they can hold any asset they expect to outperform a 3% hurdle rate, they do. And corporations are kind of doing the same thing. And that's kind of one of the challenges of the system, is that those that are young or impoverished generally don't have the access to do things like that.
Yeah.
Whereas once you have wealth, either because you're a corporation, you've got more access to cheap leverage in capital markets, and so you can put all these kind of currency shorts into play and arbitrage from the system. And that's part of why there's this big wealth concentration engine in play, and it's been going on for decades.
Yeah. So if you have gone through the insights, this was the Lynn was talking about the best product which Procter and Gamble sold. Product for the people who don't know what Procter and Gamble is, it's I think it's a it's a pharma company, if I'm not wrong, or but it's not a bank or something.
It's an FMCG company. They make
Yeah,
like all the products like Surf,
FMCG, yeah.
Excel, Tide, all of it.
Yeah. Also, the Coca-Cola example. So the best product which they sold for themselves was their bonds, and not the things which they do as a FMCG company. So this was I found very insightful about. Also, Google has also raised debt recently, if I'm not wrong, and they have raised 30-year debt. So yeah, corporations are at much better position to take leverage than individuals. So this is the game basically. Coming back to STRE, if I can see something is remaining. Yeah. So if you can see the B for the market for B minus Euro index market comparisons. So this is how the market looks like for different quality of rating: 19.6 trillion, 15.5, 3.4, 1.4. So yeah, I think this is not necessary. I think I have covered very much about STRE. This thing I have covered. One last thing to talk about STRE is BTC rating. So in case of a trader, so what is trader? In this example, or let's go to the website only. Yeah. So here, as you can see, the BTC rating for STRE is at 4.5 times. If Bitcoin's volatility is at 45% and Bitcoin's ARR is at 10%. Let's see for 10%. So for 10% also, the BTC rating stays at 4.5 times. So what does this BTC rating imply is like for every $1 of STRE, the company has $4.5 of Bitcoin backing it. So this was the last thing which I wanted to talk about STRE. Rest, everything is over. Jatin, you can stop recording and floor is open for chat.
One point I would like to highlight, Amdab, is that you mentioned that